Today, Indianomics celebrates International Women's Day, and joining me to parse the Indian and global economy, banking, currencies, bonds, loans are four top women bankers, all from the same bank, Standard Chartered Bank, Mumbai. Joining me are Zarin Daruwala, the CEO, India and South Asia, Standard Chartered Bank; Ankur Khurana, the co-head client coverage, again, India, South Asia; Parul Sinha, she's head of markets, South Asia; and Anubhuti, Sahay, chief India economics research. Ladies, it's a pleasure having all of you with us. Thank you so much for helping me celebrate International Women's Day. Zarin, that will be my first question to you. Does Stan Chart do something special that it is able to get so many bright women to the top?
So, Latha, we have 31% of our colleagues are women, and it's a very conscious effort to ensure. So when we recruit also, we try and at least ensure that when we're recruiting, we have that same ratio, even higher. Also, something that Standard Chartered UK has signed up in 2016, it's a HM Treasury thing that we've signed up to, where there's a senior person from Bill's management team who's sort of in a way responsible, and we have undertaken certain pledges on what we will do in terms of diversity. Having said that, in India, something that has worked extremely well is we have daycare centers.
Yes.
In
the bank?
In the
Near
bank,
the bank?
in
Wow.
Bandra Kurla prime location, we have 5,000 square feet daycare center, and we have at any point about 50 kids who come. So these are things that we really sort of support our women who are coming back from maternity leave. We also give 6 months maternity leave. We give paternity leave. We also give flexi working. So these are few measures that we've done. Apart from that, I think we have a lot of groups that we sort of have created. We call it lean in, where if a woman has any things that she wants to discuss, like a mental health issue or any support issues, etc., there are themes that are discussed in the lean in circles.
Okay.
We also have something called Sheroes, where we teach women for self-defense, suppose some unforeseen situation turns up, how to defend. And then we also have something where we have sort of got the men to sort of appreciate the women's side. And a lot of men have participated in that sessions, on sort of, be sort of understanding the other side. So these are few things that we've done, and it's a very, very women-friendly organization. I think I've been fortunate to have led it.
Oh, very good. I'm sure you contributed your bit to it. And you can say it several times, many times, that behind successful women, there are several men. I can tell you with personal examples. Otherwise, it's very difficult to even make a career, forget a successful career. But, I've got 4 top bankers. I'm not going to discuss only gender issues. I have to discuss, and finance issues are all over the place. So, first, Zarin, Reserve Bank has announced another bunch of liquidity steps. How do you see the impact going forward when advance taxes are paid? And is it enough now, the liquidity provided?
So headline deficit has been in deficit. Headline liquidity has been in deficit for a while. It's hovered between 50,000 crores to 2 lakh crores. RBI had made a few interventions. But, in the process of smoothing the rupee, I think we've had rupee liquidity sort of in deficit. The recent RBI announcement on 10 billion rupee dollar swap and 1 lakh crore OMO, I think that will really help. We also find that March typically is a very tight month because of advance tax. The expectation is 1,50,000 crores of advance tax will sort of go. And but having said that, I think in May, RBI will declare 2,50,000 crores our expectation of dividend to government, and government hopefully will start spending. So in a few months...
The point is, if there is going to be this 2.5 lakh crore also coming, you can expect deposit rate cuts, because banks found the lending rate going down, not deposit. Do you expect that to happen soon?
Yes, I think so.
April?
Our house view is that there'll be one more cut in April, credit policy. That's our house view.
Deposit cut?
So yes, deposit cuts will happen. See, it's a function of liquidity right now, right? The deposit rates are high because liquidity is tight. When liquidity eases, we will see that also playing out.
Okay, but now I'm going to get to the international bit as well. This 10 billion swap. But before I come to the 10 billion swap to Ankur and capital flows, Parul, has the Trump trade played out? Now dollar index, back to November levels. Is it a temporary reprieve?
So yeah, you're right, Latha. I think, I believe in the classic adage of buy the rumor, sell the fact. So the peak of dollar index may have already been reached just ahead of Trump inauguration, towards the third
110.
week of... Yes, 110. And from there, we've seen, a lot of events play out in the international markets. One, the Trump style of tariff. He's more of a deal maker than just going all out on tariffs across the board, across multiple countries. So that has really shaken up the confidence of the market on a one-sided dollar strength. So we've seen how dollar CNH is reacting. It's already seen the peak. All currencies, we are seeing that trend. Dollar index has corrected.
Rupee went to 87.90.
Yes, it almost touched 88. So we think the large part of dollar strength is behind us. Now, from here, we're also seeing, events in Europe where Germany is giving, fiscal support to their economy. So we are seeing signs of Chinese economy stabilizing, European economy stabilizing, and that is another countervailing factor playing
Dollar
out
strength.
for, dollar strength.
Fair
so
point.
I think
that all that makes
continues.
that growth picture also different if the global growth is going to be, better than we thought. But before I come to that, this 10 billion swap has clearly pulled down the forward interest rates. My 4 rates have fallen. How does that, impact corporates? Are you going to see more capital flows?
Absolutely, Latha. In fact, that was the only missing in the puzzle when it came to India macro. European interest rates were coming down and you had enough liquidity. Slowly, RBI was building in. But what was missing in the puzzle was international capital flows. On one hand, we had equity markets seeing outflows. But now this measure, in my view, will be a game changer. It will attract a lot more debt capital inflows into India, both through all the 3 means. The ECB loan route, the international bond route, as well as the FPI debt route. Okay. And, there is enough and more demand for India credit when it comes to international investors and banks. So I'm glad this measure has happened, especially as an international bank with a solid global capital market and a local balance sheet. We like to provide both sorts of solutions to our clients.
Debt capital flows. Therefore, this capital flow deficit, our current account deficit is just, 1 to 1.2%. But the capital flow deficit is likely to be bridged by this.
Will it get fully bridged? Maybe not. But will it reduce the deficit? Absolutely, yes.
Yeah.
And as funding gets cheaper for the corporate, your return on equity also improves, right? So that should bring in more equity capital as well. So it becomes a virtuous cycle.
Hopefully, that we are going to see equity flows also come in. I'll ask you all about that. But Anubhuti, what's your forecast of Q4 growth and FY26 growth? With the events of the last 1 week, we have to talk in weeks, are the headwinds lower or as bad?
So on growth forecast, we are expecting 6.4 for the last quarter of this financial year. And for FY25, we are at 6.5%. On your question on whether all headwinds have been addressed, I think it's still too early. With Trump around, we need to remain cautious. And while there is a lot of clarity when it comes to how, or probably there is a little bit of a clarity on how EU growth might pan out, how China is doing, clarity on India tariff is still not there. We'll have to wait for the...
April 2nd.
April 1st. Let's, that's the day when it gets released in US. So we'll have to wait for that. And our estimates show that if there is a blanket tariff increase of 10% on all goods, right? If that's the kind of an increase, then GDP can get hit adversely by 25 to 30 basis points. It's not only about tariff, right? Trump is also talking about GST been imputed. Right. And if that's also taken into account, there is some kind of tax on services, etc., then we can see it going all the way to 60 basis points. Okay. Reality will be lower in our view because there is a deal which probably will get
So
struck.
You're going with 6.5 for next year?
6.5. There is a little bit of a downside risk, but too early to quantify it, especially given that every day is a new day.
No, I
for
must
us.
tie all down to numbers. Ankur says that capital flows deficit will reduce. US going with a 6.5 for next year. What's the Q4 number?
6.4.
Okay, even for, no, Q4, not
Q4,
full
Q4,
year.
Q4.
Both are okay, 6.4. Rupee?
Rupee, I think we've seen the worst for dollar rupee as well, in line with our expectations that the dollar strength might have abated. So what we are seeing, however, is that the rupee will continue to underperform rest of the Asian counterparts. It's a mix of things,
So
right?
88,
88
by when?
88 by when? I think we should see. We've seen the cap. I think in 3 months we might see 88 again, but in the short term, I don't see it testing 88 again.
Okay.
But we will see RBI recouping dollars. So we expect dollar rupee to be a range trade. And around 88 levels, we do see exporters coming in and make use of that level to lock in their level.
I just wanted to supplement on the Trump bit. I think we'll see a second-order impact also, because the rest of the world also will see the impact. And India's dependence on the rest of the world for trade also, that will play out also. And the second is, one way to look at it is that on a relative basis, if every other country is also facing tariff issues, on a relative basis, we may not be so worse off.
Yeah, we may be competitive for all you know.
Yeah, we may be competitive. And the other good thing is that 60% of our exports to US is services. Okay. So, that also right now what is being talked about is goods. So I think one should take
buffers.
One should take all these things also into account.
Fair point.
Yeah.
Okay, before I take the first break, Zarin, you are in the midst of a lot of corporate conversations. Are you seeing the Capex cycle start? I mean, not start, but pick up.
So, Latha, I'm seeing the top business houses. If you take the top 5 or 7 business houses, the Capex is happening. So it's not, I've not seen them sort of, not do the Capex that they've announced or sort of progressed on. So if you take the big business houses, Tata's, Reliance, Birla's, JSW, all of them are doing Capex and in a meaningful way. I think what's happening is that the private sector Capex is not showing in bank credit because private sector has a lot of cash flows, free cash. And any project execution, the first year they'll use their free cash more than anything else before they come to the bank market for borrowing. So
the Capex cycle has started, according to you.
It is modest, but it is not stopped, if I was to use the word. It's not like, we are seeing people do like 1 or 2 years of free cash equivalent Capex in the private sector, but it's not what we've seen at the very peak.
Yes.
No, that kind of percent
the thing that we saw in the first decade, that is not there. But perhaps we will get somewhere close if we use this Trump challenge creatively. Well, we have to take our first break, but I have got lots more questions on interest rates. We have not even touched where interest rates are headed, unsecured loans, and of course, back to the impact of tariffs. All that in a minute after this break.